some, or we'll talk about some other aspects of trading as well. So starting of the week, we started on the 9th of November, right? We started with, so let's say 9th, I took a lot of trades until extending until over here. So let's go through one trade. Let's go through all the trades. So one trade here first, right? First trade was taken on gold. So gold at 1947. So let's go to gold. So let's go to gold and let's see on the 9th. So let's go back to the 9th. Let's go 30 minutes. Let's go back to the 9th. So this was the trade that was taken, right? 1947.54. So how did I take this trade, right? How did I take this trade? All right, so let's go here. So 1947 was right over here. So let's see, short positions at 1947.54, right over here, right? Let's look at this. So on the 30 minute, right? On the 30 minute, it looked like this, right? So why did I take this trade here? Why did I take this trade right over here? All right, so let's look at this. Now we come to the daily. Let's analyze the daily, right? Let's go to the daily. Let's go to the daily and let's see what we could have done, right? So the daily we had a resistance right over here, resistance here, and another resistance right at this point. Okay, right at this point. See, candles rejected, candles rejected, candles rejected. So another rejection was coming, but we didn't know what was going to reject. So gold was heavily bullish. With the elections coming through, gold was super bullish. So what did we do? We wanted confirmation to take a buy over here, right? To take buys over here. But then what happened? What happened on gold? So we had that news, right? We had that vaccine news. Here sometime back. We had that vaccine news, and what happened? Gold. All investors on gold, all traders dumped gold, and gold with confirmation. This was the confirmation, 1967 over here. This was a heavy resistance, right? And gold kept going down. So I scrolled down to the 30 minute, right? The 30 minute on gold looked like this. Okay, 30 minute looked like this on gold. So taking a trade on the 30 minute is very risky, very risky. Why? Because, like, gold has heavy momentum down. I mean, only on gold, it applies only on gold. So my stops would have been at least around 120 pips. So what did I do? I went to the 5 minutes. Yeah, 5 minutes made sense on gold. I went to the 5 minute. Let's go here. Let's go to all the way to this area. Yep. So I went to the 5 minute, right? So the 5 minute looked like this, and we had heavy bearish news for gold. Why bearish? Because we had good optimism in the market. So all investors, all traders, they will take their money out of gold and pump it into other assets such as the USD, such as no JPY, no gold, no metals, right? So, and oil. So why? Because vaccine was in play. So when the vaccine optimism was in play, we know that lockdowns, there won't be any more lockdowns. There'll be reduced curfews. There'll be a lot of movements between countries. So flights are resumed. So when flights are resumed, more oil is demanded. So for cruises, right? So all cruises are resumed. So more oil. So we saw oil jump up. We saw oil going from $38 per barrel to 42. Now oil is currently trading at 40. For UK oil 42. US oil 40. So what happened? So I took this trade right over here, just over here, right? So I saw that this candle, this 5 minute candle, it fell around 120 pips, right? 120 pips. So this candle, right over here. So this candle which stops above this, the 5 minute, right? So right over here, as this candle formed, I knew that the next candle can break the low. These are the trades I looked for, but I wanted an early entry. So I got in right over here. As this candle closed, I got in right over here with my stops above this candle. This was my stop. This stop was around 30 pips. Yeah, look at that. Yeah, 35 pips. So I got in right over there with the anticipation that gold can continue further down. Why? Because I went to the 30-minute also, and I looked left. When you look left, on the 30-minute, you see this clean candle to the left. Right now, let's enlarge this. Let's enlarge this, and we see this candle to the left right over here. All right, let's enlarge. Okay, so this was the support we were holding, this support on the 30-minute, but this broke, right? So as price was falling, we had this support right here, this support. This was the second support right over here, right? So what beginners do is they take buys, because just because it's a support doesn't mean you have to take a buy. You have to look for confirmations. So what did I do? So we had clean move here, and we wanted a clean move all the way here. Clean move from here to here. This was the first step, right? So I took, as this candle broke the low on the 5-minute, I took my trades right over here on the, let's go to the 5-minute now. So I took my trade right over there. And what happened? And I think, yeah, this lasted around less than a 30 seconds, less than a minute. This trade was less than a minute. So now let's go here and let's analyze on the 5-minute. So as this 5-minute broke the low, right over here, broke the low. So I entered early. I wanted to get in early because I knew that this will result like this. When gold is trending bearish, it just trends. Gold trends bearish entirely. So just like this, right, broke the low. I was hoping price to break the low, and my stops were in place. I had like a 35 pip stops because it's gold, right? It's gold. So on a 5-minute, it was 30 pips. On a 30-minute, it was 100 pips. So it's your choice whether to choose the 30-minute or the 30 pips or the 100 pips. So for me, this was my risk exposure, right? So I chose it on the 5-minute. So as this 5-minute broke the low, where did I close my trade? I closed it at 1945.71. So 1945 was just over here. As this came down, 1945.75 was right over here. Yeah, 1945.75. 1945, yeah, 71. All right. The 1945.71 was right at this point. Okay, yeah. So this move lasted literally like less than 50 seconds. So this move was around, I would say, yeah, 18 pips. So 18 pips exactly. So I had a one lot open, so $183 right over there. And then later on, like we went to GBP JPY. So let's analyze gold first, right? So gold trade taken here, and let's go to this. Like this was later, 1912. At 1912, I opened a 0.25 lot. So let's go to 1912. Same day. 1912 was right over here. 1912 was right somewhere here. Yes, right over here. So let's see what my thought process here was. So 1912 was just here. Okay, 1912 was here. Right, so I entered a sell. With a 0.25 lot. Why 0.25 lot? Because you see I made some money here. You see I made some money here, and this was leveraging some of these profits. Let's say I would leverage $115 on this. So over here, my risk percentage was like just $50, $60, right? $50, $60, what happened? I opened at 1912.77, and then what happened? Price just dropped to 1908. So this was that candle. This right over here I opened. So 19 price dropped to all the way to 1908. 1908. So 1908 was right over here. As soon as I opened on 1912 is here. Price dropped all the way here, 1908, right? 1912 to 1908. So this was like 40 pips. 1908 was right over here. Yeah, this is around 40 pips. So just the way, see how this 5-minute candle it's such a small area right here, but this was around 40 pips. So price further fell on the same 5-minute candle. It went further down to 80 pips. It fell 80 pips. So my take profit was at 1908. Because why 1908? Looking left. Let's go back to the 30-minute. So on the 30-minute, let's see how price, right? So this, it looks like this, right? So 19012. Why did I choose 1908? So I saw this area on the left, right? I saw on 1904, I saw this support area. So if I were to draw this, all the way here. So this was a recent support right over here, recent support. So then I was expecting some kind of rejections and I wasn't willing to stay in that rejection. So I executed over here and I closed over here. But what happened? Price kept on falling. Price broke all barriers. Price broke all supports and kept on falling. And then later on, right? Same thing. We go back to this was GBP So this was same day. So at 1875, at 1879, I executed gold sales once again, right? 1879. This was like a 1, 2, yeah, this was a 1.5 lot. And then further on, I executed another 1.5 lot, okay? So let's see, 1.5 lot on a standard one, 1879, 16, 1879, 16. So let's go to 1879 was right over here. Yeah, 1879 was right over here. So short positions once again. This was all taken on the 5-minute. Everything was taken on the 5-minute, right? All these trades were taken on the 5-minute. So 1879, this was this thing. And when I went to the 5-minute, let's go to the 5-minute. Let's look at the 5-minute. Come on, 5-minute. Yeah, so 5-minute looked like this, right? Let's enlarge this. All right, so 5-minute looked just like this, right? First it was ranging a little bit, rangy, and then what happened? This 5-minute closed bearish, right? This, can you see this 5-minute? Right over here. This closed bearish, and this was towards the NYSE open as well. So what did I do? Took sales right over here, and then price just kept on dropping. My stop loss was just about this. Just about, as this candle closed, my stops were just about this, because I didn't want price to come up all the way here, because these two candles, you see these two candles closed side by side. That means this was respecting this. So what happened? Price came down here. I took sales here. As price went down, I secured. See everything, 1879, 1877. 1870, this was secured at 1870. Oh yeah, this was secured at 1877, 1877. So 1877.61, right? 1877.61 was right over here. So as soon as I opened it in 2 minutes, all this gold trade lasted less than 5 minutes, right? 1871, and then what happened? And then let's see, I opened another sell, a 0.15 at 18. Yeah, this was open at 1873, and this was open for that 1875 22. So what happened? 1873 was right over here, just over here. Yeah, just over here. As this candle was coming down, I saw, what did I see? I saw this wick. This wick with momentum, wicks always get filled. Keep that in mind. When there is momentum, when there is high volume in the market, wicks always get filled. So I took sales here. Now I had a lot of money to play with. I had money from previous gold trades to put in this, right? So I took sales here at 1873 and 1875 as well. And right over here, as this candle came down, it just kept on going down. Just pumping down, right? Look at this 5-minute. No retracement, nothing whatsoever. Just came down. Everything came down, and then I called it a day on this. Yeah, this was my last trade, 1875 to 1870. So this trade lasted like, this trade was like, I think less than 2 minutes. This trade on a 0.5 lot close to around 50 pips, right? 50 pips. So let's look at that. 1875, right? 1875. So right over here, yeah. See, this was insane. Price just kept on dropping. So when the market gives you opportunity with controlled risk, you can increase your lot sizes. See how I started with one lot, right? So I won on that one lot, and then I went to 0.25 lots right over here. 0.25, or I won on that. Now I have more money to play with, right? 183 plus 119, almost 200, 200 and almost 300 bucks. So, and then I thought, okay, you know what? I have more money to play with. So more sales on gold. So now let's go. Now gold is done. We analyzed gold. Gold kept on falling. 1870 was the last trade I had on gold. So 1870 was right over here, and then gold kept on falling another what? Another 109, 200 pips, right? So money on the table there, money left on the table there, but it is what it is. We managed to secure profits. So profit is profit end of the day. And then we go to GBP JPY, same day, right? Same day GBP JPY 136.737. So let's look at GBP JPY. Same day on the 9th. Let's go back to the 9th. Let's go. This was the 9th. Oh, I remember this. Yes. So on the 9th, right over here, 136.737. So I had 1.5. Yeah, I had like a 2 lot open. Yeah, I had like a 2 lot open, or 1.75. Yeah. So I entered right over here, just over here, long positions at 136. What was it? What was it again? 136.737. 136.737. Just over here. Just over here. Yeah, just over here. Why? Because see, we had vaccine optimism. Same thing, right? Vaccine optimism. Okay, and this was taken on the 15-minute. It stops kept below. Yeah, so my stops were kept right over here. So what did I do? I saw that price was breaking up. Price pushed up. So this was the trade I was looking for, right? Let me show you something. This was the trade. This was the trade. This trade was what I was looking for, but I was late to the market. So this formed a support here. Price made a high at 136.387, came down to 136.213. So this was a support. And if I had taken a trade here, which stops about below this, that means stop loss is trade is here. Stop loss will be around 4 pips. So this will be my bonus move. So this would have been my bonus move. Price made a high. So this is the support I look for. This is the trade I look for. But no, that did not happen. So what did I do? I looked like this. I looked on the 15-minute, and this was a resistance that was formed throughout. Look at how this resistance was respected right over here on the 4th, and came up, couldn't break down, couldn't break on the couldn't break down during London as well, right? Couldn't break down during London. So as price went, price was going, this was trying to retest the high, and then I saw gold. I won on gold as well. So I thought, okay, you know what? Vaccine optimism means it's good for US. It's good for US. Why? Because businesses are opening up. So people from the yen, people's money, investors' money from the yen, safe haven flows are relaxed. So it relaxed. So what happened? The yen became super weak. The yen became ultra super weak. So I took an impulse and right over here. Why? Because we were targeting this area. This area was on the daily as well. This area was on the daily. We were targeting for like this from like 4-5 days before this entry, and we knew that if price were to break up, even in my Asian analysis videos, if you look, I tell you that if price were to break up, it will fill this range. This range is around 65 to 70 pips. So what did I do? I entered right over here. Right over here. My stops were not kept below this candle. My stops were initially kept right over here. Let me show you where my stops were kept. My stops were kept right over here because I didn't want price to come back. Right? This was the breakout candle, but this was my mental stop, but I had it in place. This was the mental stop around 22 pips, 15 pips right over here. And with momentum, see, with momentum, you don't expect price to come back down. It's like you don't have to worry about price coming back down. In the event that it whipsaws down, then you have to worry and you have to manage that. But now this, I have seen it happening a lot of times. When there's Brexit news, price never looks down. It just keeps on going. You close your eyes and take a buy and you're in profits. So right over here, took buys, and then Where did I close? I closed at, this was at around 15 pips. Yeah, around 15, not 15. Yeah. So it was 737,857 right over here. 737,857 was, look at the momentum, right? How fast price was going up. 737 and 857. The first target was right over here. Horizontal ray. 737, 857 was yeah, somewhere here, right? So this was around more than 10 pips, and then I put my stops to break even, and then I had these guys running. These guys were doing my dirty work. So what happened? This guy also I closed at 877.5 because I was thinking, you know what? I won on gold, I won on this. I don't want this guy to go back because this guy is now running for $50 and above, and these guys are doing the same thing. So this guy was closed out as well at 877, just above this area where I closed. And then I had a 0.35 lot running, which ran until 978. So 136,978 was right over here. So why did I close at 978? Because 137 is also a psychological level. 137 is also a psychological level. Even though this price went all the way up, for me, all odds and even numbers are psychological levels. 136, 135, 134, like 140. Anything that's a whole number is a psychological level. So I closed it right over here. So I was expecting some kind of volume to come down, create a support, and go up. But price was in high momentum. Price was in super volume, like super fast volume. So what happened? Like this was closer. This is a 0.04 lot size. It made me $12. From 737, I closed at 137,046. 137,046 is right over here, this area, right? This, once again, this area. And then my final GBP trade with in this same position was closed on a 0.04 lot at $16. That was at 137,155. That was right over here. As this candle went up, I decided to close it and call it a day on GBP/JPY. But then at 138,147, see how price, right? This trade was taken. At on the 9th. This trade also the same day. Same day on the 9th. What happened? 138,147. I took a trade on 138,147 with, look at my lot size, right? So 0.25 lot size. So this is how I'm leveraging profits I made here to make me more money here, right? 138,147. 138. So we are all the way up here. 138. 147 was right over here. All right, yeah. So let's put this up. Long position 138, 147. Okay, just over here. All right. So this trade, right? This trade was taken here. And where did I close this trade? I closed this trade at 138,249. 138,249. Yeah, so as soon as this candle came up, right? This candle came up all the way here, 227, and this candle dipped down, right? So my mental stops. Once again, you go to the 5 minute, when there's high volume, you manage your trade on the 5 minute. On the 5 minute, you manage your trade. I know it's a very weak confirmation, but if you manage your trade on the 5 minute, your stops will be super low, and the cost of trading reduces. Intensely. So what did I do here, right? So I looked at this. I had a position right over here, and my stop loss like 138. Yeah, so 138, 147. Yeah, 138,147 was right at this point. My stops were kept at like 15 to 20 pips, 15 to 24 pips. So this was around 10 pips, so somewhere around here, somewhere around this area. Because you see, these areas, they wicked up, this filled the wick. This wicked up, this filled the wick. So now I wanted price to continue going up. So my stops were somewhere here. So once again, why were my stops pretty high? Because I made some profits here. Normally my stops are on 10 to 15 pips, but I made some profits right over here. And what happened? Price went up to 249, 138, 249. Yeah, so 138, 249, and I secured 15.15 lot right over here, 0.15 lot. So this came down, right? This came down, but as this candle formed up, it went up all the way up. So 249 I secured, and then I put, as soon as I got my 10 pips, I put my stops to break even right over here. So why did I get stopped out? Why did I get stopped out? Look at this, 147 right over here. As this candle went up, this candle went up and looked all the way down. So I got stopped out at this point. So at this point, I'm thinking, okay, you know what? It is what it is, done. And then I had a impulse trade. Look how I am reducing my lot size as I am profitable. Some people do the opposite. Some people increase their lot size as they get profitable. So over here, I started with a big lot. As I'm moving into the day, as I'm taking more trades, my stop loss is reducing. My stop loss is reducing, and then I looked at this 138.321, right? So let's remove this. Let's go back to 138.321. Okay, so this one, right? So this one was, yeah, I remember this. I took this right over here. I took this right over here when this 5 minute was forming bullish. Yeah, 5 minutes was forming bullish, but instead of going up, we came all the way down. So this was stopped out. This was stopped out at 248. Yeah, so I closed it. Yeah, I think I took this here. Yes, 321. Yeah, so I closed it somewhere here. And then, oh, UJ. So UJ, right? So UJ, I have told you this many times when I'm trading. UJ was my favorite pair back in the day. I love UJ. So what did I do? I went to UJ. And let's go back to the 9th. See, when opportunity presents, you have to make use of that full opportunity, right? Okay, so this was, this is my analysis on UJ. So UJ, right? So UJ, I was looking at UJ. So UJ was just trending up. UJ and US 30, like whenever money comes into the US dollar, UJ just pumps up, and UJ, US dollar and Japanese yen are like, you know, like mango friends. Like if the yen is strong, USD says, you know what, okay, I'm gonna go down for you, and it goes down. But if the yen is weak, UJ just keeps on trending. So what happened? I went to the 1 hour. So when I'm trading UJ, 30-minute doesn't make sense because 30-minute is very small. 30-minute bodies are super small, right? 30-minute bodies are super small. And this 1 hour, right? So I looked left, like this was a crazy move. This was a crazy move. See how this broke the high over here? This broke the high over here. So with momentum, when the highs are broken, we won't come back down. So as this went up, right? So I saw the same move happening here. This candle formed a healthy bearish candle, but the momentum was very heavy, very bullish. So right over here, just like this, what did I do? I placed an entry right at the top around 105.065. Yeah, what is my entry? Somewhere around that. Yeah, 105.010, 105.010. Yes, was somewhere here. As this was breaking the high, I took entries, and my stop loss was right over here. Stop loss was not that much at all. It was around yeah, it was around 27 pips, 25 pips. So this was taken on the 50.5 lot, 0.5 lot. So I took this, right? I took this, and what happened? So now I wanted price. So this area now it broke the high. So this area becomes this area. So I wanted price to come all the way here, this area, right? Because we had a clean range here. On the 30-minute, we had a clean range. On the 1 hour, we had a clean range. And what happened? Price just kept on pushing up. And what did I see? I saw that price was at 105.522. So at this point, this area, as it broke the high, I was like, okay, you know what? I'm just gonna let this run. So I put this at break even. USD, because this was my bonus move, right? This was my bonus move. I put this at 135, 105,010 at break even. As I put it on break even, what happened? Price just kept on coming here, and I secured right over here. Right over here. Yeah, 105, just over here. This camera. Because I look left, and now when I'm looking left, I see lots of rejections. Even the daily. This was the daily. Here, look at this. This was somewhere on the daily. This was also daily resistance level. So I secured here. I was happy with my profit on a 0.5 lot. On a 0.5 lot, I made $242. So that was fairly enough for me. That was very good. It put me up for the week, and yeah. So I took that trade, and that's it. That was one trade I took on UJ, and yes, so that's good on UJ. That was fine. And then this I would say was a very somewhat an impulse entry at 138,317, because I wanted, like I told you, I wanted price to head up to the 140. So I was hoping, like, okay, you know what, I've made some money for the week. I made some money on a Monday, and like this was giving me $250. So what did I do? I entered buy on 138,317 right over. Yeah, did we discuss this? Yeah, 138,317 was right over here. 138 on the 9th. 138 on the 9th. 138,317. Yeah, I think it was here. 138,317. 138. So it was later here. Yeah, so 138. This was later after the session, right? This was later after the session. So 138,317 was taken somewhere here. As this candle came down, I took entries right. Oh, yeah, right over here. Yeah. So as price went up, this was forming a support, right? If you look left, this was a support. This was a support, and we went all the way up. We went all the way up. So, but what happened? What happened was that this area, right? So 138,317, I secured at 391, and then look at this, right? So this same thing came to 138,202. So this I was willing to have a bigger stop loss, right? A bigger stop loss. So I did not place my stops right over here. I gave this trade room to breathe. I gave this trade room to breathe. Yeah. Yeah. So that was the thing. What happened? Oh, wait. Let me tell you this. Okay, so what happened here was the trade wasn't taken here. Yeah, this was around my time. This was around 9:10. So 9:10, I was done trading. So this was taken. This trade was taken right over here. Yeah, 9:10, I was done trading. So yeah, 317 was taken right over here. This area. Yeah, this area. Was anticipating some movement, and then we had a wick down. Why did I take this trade? This was taken at 15:20, 317,391. I secured, okay, and then this was taken same time. Okay, so this 313,110. Oh, okay. So this is what happened, right? This is what happened. So these two, one lot. I used one lot. So what happened, as price came down, I closed this trade. I managed risk. Okay, yeah, I remember now. As this came, this somewhere here, right? So 138, I'll tell you exactly. 138, 317 and 312 taken at the same time, right? 320, and this was taken a few seconds later. Yeah, it makes sense. So this was taken around right over, yeah, right over here. Yeah, 750. So this trade went up all the way, and this trade came down. This trade kept on coming down. This is where I closed my trade. Simple as that. Yeah, 138,317. I secured until I secured 391. 391 was 317. 391 was right over here, and then my other position was kept open, and it went to, this trade went all the way up to 464, but I did not secure it. 464 didn't secure, came down, and I closed 50% of it. I closed half. Yeah, and then we still, so GJ buys were also pretty good. right? GJ buys were also pretty good, and this was the same trade, taken 337 and went to 386, same as this, secured it. And yeah, it's a pretty good Monday. So this was a good Monday. And yeah, so oh, and this, okay, this one on the 11th, okay. And then we came down. So this was Monday. So Monday was pretty good. I was up around 1,400 bucks for Monday. And so now I had more money to play for the rest of the week, right? But that doesn't mean, right, you can over leverage and over risk on setups that you don't find fancy. No high, if there's no high probability setups, then there is no point taking those setups high lot. So we come back, right? Now we come back on the 10th. On the 10th, we see, let's see, let's look at 10th, right? Let's go back to, let's look at the calendar on the 10th. So 10th was a pretty smooth sailing week, right? Put this up here. So this was 4th, yeah, 7th. Okay, so this was on the 10th. So look at the 10th, right? 10th, it was pretty chilled out, and nothing much, only NZD official cash rate and nothing much. Bank holiday, US bank holiday. So on this day, I think, yeah, I made only $87 on this day. Yeah, this day was pretty slow. This day was pretty slow. And I took a trade right over here on the 10th, right? Yeah, GBP, GPY buys 138,955, and yeah, no, I made $400 here. Yeah, I did make $400 here on the 10th. On the 10th. Yeah, so this is on the 9th, this is on the 10th. Okay, so this was, it is 10th, right? Yeah, 10th. Okay, so 138,955. So 138,955. Let's go to the 30 minute on the 10th. We said chart. Let's go to the 10th of November. 10th of, let's remove everything. Let's remove this. Yeah, so this was 138, 955 taken on the 10th. Okay, all right, taken on the 10th. So 138,955. So this was during the 9th and 10th. As we come to the 10th, this was on the 10th, and this was during London. And 138,955 is right over here. Right over here. So let's put this resistance, okay, and 138, let's put this up, right? 138,955 was taken right over here. 955. So what happened, right? So we see this, right? Let's see now, let's go to daily here. Let's analyze this, right? Daily. Okay. On the daily, right now, look, daily, we had this resistance. We had this resistance right over here. And then we had this also probable resistance here. And then we had this area to fill all the way up to here, right? Or clean candle. This was a clean candle. Why? Because you look left, rejected, rejected, rejected. This area was a clean candle. So now this daily formed up here, right? So now my idea was, okay, as this does on the 10th, right? As this does its dirty work here and comes and breaks the high, we can expect price to fill this area. So then I scale down to the 30 minute, and on the 30 minute, on the 10th, right? So let's go to the 10th. Let's go to the 10th, and we saw this trade on the 10th. And what happened? So this was my trading time. This was at 4:30, and then as price broke this high, we took entries right over there. Yeah, we took entries right over there. And what happened? Price. Hold on, give me a second. All right. So let's see. 138,955 secured at 0.056, and then secured at 139,165. So 138, and then all the way here, 138,953, and secured here, and this candle just flew up. This momentum was pretty high, secured, and look at my stop loss, right? As this stops were right below this candle around 16 pips. So why? Because this was respected throughout. 9th November respected, 10th November respected, and came up here, and then we came all the way up. We went all the way up. Then now what did I do? I went here and I saw that, okay, 138 I secured at 165. This was secured at 10 pips. This was secured at like 21, 22 pips, right? On a 0.25 lot, made $49. Okay, and then still later on in the day, saw this, right? 139,521, 139,525, right? So 139,521 was right over 139,521, 139,521, right? 521 was, yeah. So I don't think I took a trade here. I think I took a trade right over here, right? So this was around 7:30. Yeah, so what was my thought process? Let's say if I took, wait, hold on, let me look at the time. Pretty confusing because we took many trades. So 521, right? So this was taken at 12:53. Okay, so 521, this was taken right over here. So this is obviously later. All right, so 521 was taken, 521 was taken, yeah. 521 was taken somewhere here. Yeah, 521 was taken here. So this candle formed a support. So this candle made a high, right? This candle made a high. So now as this price broke up, with stops below this, took this trade, but I closed, right? See, as I closed, right, I had a two lot open, but as it went up, I closed at 579, and then I closed another one lot here at 625 exactly, and this was closed at 610. Yeah, so this was pretty good. This on the 10th. So I traded GBP, JPY to manage leverage a certain amount from the previous day profits to make on this. So this was, I would say, around $300, $400. I leveraged and I made a good gain on this. So 180, around 230, 240, 300, yeah, somewhere around $300. And then same day on the 10th, right? Same day on the 10th, 139,756. 139,756, 746. Oh, I remember taking this. I took a trade right over here. Yeah, this was a stupid move, right? This was a stupid move. Took this trade right over here. And I see, as I make profits, I've reduced my lot size very much. A lot, 0.10. I used one lot here and I used 0.1 because I am now content. I'm now content with the profit I'm making. So 0.10 lot size used right over here, and that resulted in an 18 pip loss. So 18 pip loss on a 10, 0.10 is nothing much. It just, like, you know, this probably covers for this, and that's gone. And then I had buys at 1885.8 gold. So let's come back to gold, right? So this was somewhat an early entry on gold. So I remember this as price went up, broke the high. So let's go back. Let's remove everything, remove drawings. Let's go to the 30-minute. This was on the 10th. So let's go to the 10th. 10th. Okay. 10th at what time was this? Time was, okay, so around 1:47. That means, yeah, so 10th, this was the morning time, and yeah, right over here. So to look at candles, you need to enlarge them. Right? So this trade was taken at 1880.58, right? 1880.58. So 1880.58 was right over here. Yeah, this is taken. Oh, no. This is on the morning, 10th was here. Yeah. 1880.58. Yeah, I think it was taken here. Yep. Yeah, so this yes, so this candle, right? So now just think that these candles haven't happened. These candles, nothing has happened. And let's go to the, let's take this trade like 18. Let's put this up first so we'll get a clear view. 1880 58. Yeah, okay. All right, let's keep this here. And I think this was taken on the 15-minute. 15 is a better chance on gold. All right, so okay, so this was the trade. Yeah, this was the trade. So let's look at this, right? So 1880 58. Okay, so 1880 58. So 1880 58 was taken once this candle broke the high over this. Yeah, I remember this. This candle broke the high over here. This candle broke the high over here, and we entered right over here. We entered right over here, right? Right over here. And we were expecting, because we saw clean candles, right? So this was like a support, a support on the previous time frame. So we were expecting price to break through this. So let's say support was right over here. So this was a support. So as this candle came up but couldn't close up above, right? So let's keep this right over here. Okay, this candle came up and closed up right over here, but we needed more confirmation. So why? Because this looks very enticing to enter. So what have I told you about enticing trades? Enticing trades are always risky. So what happened? We, like the others, got in right over here when this high broke. As this high broke, it looked like you were going to go in profits, but it came all the way down. So as it came down, I closed like majority of, I closed all my positions. I closed 0.25, 858, 880, 17. So this came down, and as this came down, I just closed it. I closed it, and then now we are waiting for a support to be formed and then price to break through, right? So now this area was a critical area. This area was a critical area. So what did we do? So next candle, right? So let me go to how much. This is done, right? So 67.50. 67, was it this? Yeah. So let's put this here. Okay. So 67. So 1881, 54. 1881, 54. This was on the 10th. 1881. So let's close this. Okay, let's keep this here. 1881, 54. 1881. So now you see, as this candle broke the high, right? So now we know for sure, we know for a fact that this is a resistance area, right? So do you remember that we had that crocodile indicator right over here? We were waiting for the price to come all the way up. So this was the crocodile. This is where the crocodile was there, right? And then what did we do? As this came up, I had a buy stop over here. Price just wicked up all the way. So this was around 27 pips. So I secured on a 0.5 lot. I secured around, this was around 13, 14 pips. So this week, see, I secured here, put stops to break even, and then we got this candle. Look at this candle, just came down. So yeah, we waited, we lost here, but we waited. Look at the waiting time, right? We waited. This was around 5:15 my time, and this move happened around 7:30. Yeah. Sorry, 6:15, 6:30. Yeah, this was around 5:15. This was around 6:15. Yeah, 1 hour. We waited 1 hour for gold to pay us, so that was okay. And then now 11:11. So now we come back on the 11th. Yeah, so this day, this is the day I made, I think, $87. Yeah, this was the day I made $87. So on the 11th, which was a Wednesday, let's go back to 11th. Yeah, 11th, right? Yeah, 11th. Yeah, so 11th was the bank holiday. Yeah, correct. 11th was the US bank holiday. So this day, yeah, so JJ wasn't here on this day, and I was telling the rest that today, as I came to the charts, I'm not feeling it, I'm not feeling it to risk. So my risk exposure was not even $100. My risk exposure was not even $100. So I told myself, you know what, today I'm not going to use, I'm not going to use any one lot. I'm going to conserve risk properly, conserve risk very well. So we came to the charts and we saw GJ, and we took buys on GJ. So this was around 0.50, yeah, 0.50. And let's go to GJ. So let's go to GJ right over here. 139773, 139773. This was on the 11th. Let's come back to the 11th. So 11th, yeah, right over here. Was it this? Yeah, I think it was this. Yeah. Okay. So let's take this away. So now we see that 139,773 and I closed at 139,891. So 773 was, yeah, 139,773 was right over here. This was taken on the 15 minute. Yeah, 15 minute was a better entry. 139. So let's go to the 11th, right over here. Yeah. So, oh yeah. So this was taken. Pre-London. Yeah, pre-London. This was not a live trade. This was taken pre-London. This was taken right over here. I think. Yeah, 139. What was it? 139.77 something, right? 139.773. Yeah, correct. 139.773 on right over here. Yeah, as it broke the high. As it broke the high, I had a long position here, which stops below this, right? So why did I have stops below that? Now I look left. I see that price made a very nice high on London, during London. Look at that high, 140, went up to 142.94. So then I thought, you know what, this was a support created, made a high, support created, went up, came down. So what are the odds that we can get a support created for New York and let price play out? So I drew this, right? I drew this right over here. And now this support was being created. So now this was the entry. So what did I do? I said, okay, you know what? Previous resistance is now acting as support, okay? But just because one candle is bullish doesn't mean I'm gonna take a buy. So what did I do? I waited till this candle does its thing here and came up and broke the high over here. As soon as it broke the high, my stops were around 13 pips. Around 11 pips. So these are the trades I look for, right? 11 pips, very favorable. 11 pips stop, and then we can go all the way here. And why here? Because first destination was here, because this created a support. So previous support can now be a resistance. So then I thought, you know what? Okay, so I'll secure some profits here. So let me secure some profits there. So I opened a 0.5, right? So 0.5, 35, 0.3035. I secured $39 on at 891. 891, yeah, see, 891 makes sense, right? Makes sense. And then this price came down, went up. So price never like came down to my entry, only this price. So this was my runner. So this, I remember this one, right? This one went into profit and came back down near my entry, and then further pushed up. So 937 came down here. The 937 was right over here. Yeah, right over here. And then I just had after that I had a 0.02 open. So I was thinking, let's see, you know what, 0.02 doesn't make much of a difference anyway, even if it's a profit or loss. So let's see if this 0.02 can run up all the way to 140. And it didn't. It went up to yeah, it went up to 140, but this candle just came down. I was hoping price to fill this wick. Look at this wick. Another 30 pips from there. So price came all the way down, and this is where I got stopped out. This is where I got stopped out, and it is shown right over here. Yep, look at this, 773. So price never came down. So this was open for some time, and then 773 came down, stopped me out. That's okay. I see, that's why I secure most of the profits here, right? And then this was somewhere towards when we were ending the stream. So this was very nice though, right? 1873. So I had, once again, a 0.25 open. I had a 0.50 open here, and now I'm risking only 0.25. So now 1873 12. So this was on the 11th. So let's go to the 11th, right? Let's go to the 11th. So 11th was right over here. This is 11th morning. This is 11th, and yep. So 11th was 873, right? 873. Okay, 873 was taken. Let's put this here, right? 873 was taken here. Okay. Okay. 873. Let's take short positions here first. 873. What was this? 873. 873.12. All right, so makes sense. 873.12. Okay, so let's see. Let's go back. This was taken on the 5 minute. Yeah, I think 5 minute. Gold, I always take it on the 5 minute because then you can manage your stops pretty well on gold. 11th. Yeah. So this was taken right over, yeah, so this was taken as price came here. Okay, let me have a look at this. So 873, right? So 873, this was at 540. So 873, 540 on the 11th. So let's look at this. So on 873 to 871.89. So 873 to 871. So it should be this. Wait, let me look at this. This was taken live. Yeah, this was taken live. This was taken live, and let me look at my archives to correctly tell you that this trade was taken right over there. Yep. Oh, yes. Okay. Okay, so what happened was, yeah, so let's go back on the 15 minute, right? Yeah, so this was taken right over here. Okay, got it. This was taken on the, 5 minute, yeah, but later on the 5 minute. This was taken right over here as this came down. So let's put this up, right? So this was at 540, so this was taken later on the stream. So this was this area. Yeah, it should be this area. Let's extend this, right? Yeah, it was right over here. Price came up, wicked all the way up, broke down and went all the way back down. Yep, so this was taken right over here. Yes. Yeah, so right over here, short positions were taken at 873. 873 was right over here. Yeah, right over here. Let's look at the 15 minute. 15 minute. 15 minute. Let's look at the 15 minute. Okay, yeah. Okay, so this, yeah, this is taken right over here. Yep, perfect. Right over here, Ash just broke the low, right? Ash just broke the low on the 15 minute. Yeah, this is recorded live as well. So 873, 873, 873, 873, what was it? 12, 873.12. So let's put this at 873.12. Once this candle was coming down, we entered right over here. Yeah, right over here. Yep. Yeah, that makes sense. 873. Yep. So why did we enter over here? Because we saw, yeah, this makes sense, right? 873. Still confused about this. Let me look at my archives. So we came to the chart, and this was this a 5 minute chart or a 15 minute chart? We had a wick down on the 15 minute. Okay, a 5 minute. Let's go to the 5 minute. I would never take on the 15 minute. That's the thing. So let's go back to. Let's go back here. Let's give it another try, right? Let's give it another try. 14. So let's go back all the way here. Now let's look at this, right? So are we looking at this correctly? 11th November. 11th November. This was on the 11th November as well. Okay. 1873, 12, 1871, 74. Okay, 1873 was right over here. Okay. Right. So this trade was taken later in the session, right? So later in the session, later in the session. So price formed like this. We had, yeah, okay. Okay, so we'll get back to this later, but either way we took cells. So I will look at the live. So I can't remember where I took this exactly. Was it later in the stream? But I believe, yeah, Umar and everybody else was here. JJ wasn't here. Yeah, so let me see where this formed, right? 1873. 1873 was right over here. Okay, let's come back to this later. Anyway, so after that day, yeah, so took cells here. Cells went to 1874, fine, that was okay. And then on the 11th, on the 12th, right? So on the 12th, I came to the market. So this was pre-London, right? I mean London, almost London. London rolled over to New York. 138,859, 138,859. And so what happened at 138,859, 859, right? So I took a buy at 138,859. So let's go back to, this was the last trading day of the session. 138,859, 30 minutes. 138,859 was on the 12th. So let's go to the 12th. Yeah, let's go to the 12th. Right over here, 138,859. So this was my trading session. Yeah, perfect. Okay. Yeah, so this area, right? So this area right over here, 138,859 was taken here. This was taken on the 15 minute, right? So 15 minute, 138,8. Let's draw this first. 138,859. Okay. So let's go to the 15 minute. Why did I take this trade on the 15 minute? Because you see that the 15 minute, right? This was taken at 130. Oh, this was taken right here. Yep. 138,859, right over here. As this candle broke the low, as this candle broke the high, stops were kept below this, okay? And I was expecting the trade to go up, right? So 859 right over here. And then price went up, but you know what? I had some work to do. Excuse me. So I had some work to do, and I wasn't willing to keep my one lot open. I had a good week and I closed it. As soon as I opened it, in 2 minutes, I closed it. This was like a break even. This was like a break even, almost a break even. And then later during New York, I took buys at, before the stream started, I took buys at 138,998. So this was a very, this right over here. So I remember this. I remember my losses more than my wins. So 138, as this candle broke the high, right? As this candle broke this high, it went up, but then it came back down. So one would ask me, why didn't I close this trade when it hit my break even? Because I had some extra, like, I had some games to play with. So I had a 0.75, a 0.225 lot open. Yeah, 225 lot open. And then that resulted in a loss of $260. So this was a $260 loss. Why? Because 130. So my risk percentage was around $400 to $500 that day. It was the last trading day of the week for me. So a portion of that profit I wanted to risk over here. So then as price came down, I was thinking, you know what? Price tried to break up and now it's coming down. So I closed this at 138,884. So 884 was when this candle broke the low, and it's coming down right like this. And now I know that. So this is the New York volume coming in. So what are the odds that price is gonna come down and not go up, right? It won't go up because you see this is called exhaustion. These are exhaustion wicks to the left. These are exhaustion wicks to the left, right? Exhaustion wicks right away. This was at 315. 1, 2, 3, 4, 5, 6, 7 candles tried to break up above this. 7 candles tried to break up above this, but couldn't. So what happened? Price just looked left and price thought, you know what? I'm gonna mirror this same candle. I'm gonna fill this wick. So what did I do? I took a 5 lot, right? So now my risk here was 260. So I had around 140, around $200 to play with. So I know that if I take a 5 lot and if price goes into a drawdown of $200, I'm done for the week. I am done for the week. So I took an entry at 138,882. 138, right? As this candle came down, 882, like right over here, right? Right over here. I took the entry. I took the entry. Why? Because now we draw this, right? This was the recent support created, recent support. If you extend this to the left, you see support as well. And now we see that, you know what? This was a candle that came up and now it couldn't break down. What are the odds that price can fill this wick, mirror this candle and go all the way down? Then I took an entry here. My risk was super controlled because the 5 lot is mentally draining. 5 lots is mentally draining. Let me tell you that. 5 lot is mentally draining. So 138,882 right over here. Yeah, with spread. Yeah, it activated here. And my stops are placed just above this. Just above this. And if price were to come, this was around 8-9 pips or around $500 risk. But if price were to come here around 4 pips, then I'm out of this trade. Around $200, $23, out of that trade. So what happened? Price, this was the beautiful thing, right? I secured at 793 on a 3 lot. 793 was right over here. As this candle came up, okay, so I was like, okay, you know what? So this candle came down, right? I haven't secured it yet. Price is still open. And stops at break even though. Stops at break even. And this candle came up. So I was thinking to myself, you know what? Today might be a losing day. That's okay. I made profits for the week. Just because one losing day, you have a losing day, doesn't mean you have to have a losing week, right? So 5 lot open. So price was coming up here. So I had another 2.2 pips, 3 pips for me for price to hit my break even. But what happened, right? Price came, broke the low over here, and then kept falling. Price fell 18 pips. I secured at 138,793. So 138,793, and then further on 138,882 and 750. So 750, my entire lot was secured. And then yeah, this is the same thing as this. So 138. So last sell, right? So last sell was taken at, I think this was taken live as well. So 138,612. Yeah, this should have been taken live. 138,612. So 130 is the price. Oh wait, this is 138, right? Yeah, 138,612. So price kept on falling, right? Price kept on falling. So now this trade, yeah, 130. I think it was taken right over here. 730. Was it taken here, or was it taken here? 138,612. So let's look at the 5 minute. Must be on the 5 minute. Oh yeah, this was taken on the 5 minute. Oh, this was the day I drew the candle. Yeah, yes. Okay. So let's look at the 5 minute. So this candle was what I drew, yeah, on the 5 minute. So yeah, so this is the candle. Perfect. Lovely. Okay, so this was the candle I drew. Right? This, yeah. 138, yeah, right over here. So price came like this, right? So we took entries right over here because we looked left and like, okay, you know what? Let's take entries. So we got in at an earlier price, 138,612, right? 138,612 earlier price. We got in right over here as this candle was coming down. 612 was right here. Yeah, 612. Okay. So we got in early. Why? Because price was coming price was coming all down. It was coming down all the way here, and then right over here, and we saw that, you know what, if this 5 minute candle breaks the low, I do the candle just over here. Yep. So breaks the low, we are heading down. So what happened? Price broke the low of the 5 minute, and then we went all the way down. We went all the way down to 498. This was on a 0.25. See how I used very small lot size, a 0.25 lot size, and got $27 there. So overall profit for the week was $2,051.77. This was the overall profit for the week. So Monday put me ahead. Monday I made 1,400, and rest of the week I made around 700. Yeah, around 700 and $650. Yeah, somewhere around that. So last week, as you remember, was election week. Election week, we made around $700, $650, $800. This week you see the difference, right? You see how much potential there is and how much you can make when you manage your risk. So when you manage your risk, so all this because manage risk, see how when it comes to trade management, you have to reduce your lot size as you make profits. As I made profits, I reduced my lot size. But this over here, you might think, you know what, he used a 2.25 lot, and then over here I used a 5 lot. Why? Because this was a Thursday, this was the end of the trading day for me, and I thought to myself, you know what, I still have $200 to play with. Am I going to utilize that $200 or am I going to save the $200? So I was like, you know what, I'm up for the week. So I'm up around $1,000 a week and 1,500 quota, like, you know, that was my target and that got hit. And I was like, you know what, let me play with this money. So I played with that 5 lot, managed risk perfectly. So made around $2,051.77. So that was a pretty good week for the month of November. So second week of November is going pretty strong, and now we are approaching next week. So next week is also pretty calm week, right? Pretty calm week. So this week was pretty calm. Next week, let's see what next week brings. Next week was pretty calm as well. Yeah, we just have read for the news for USD at 7 p.m. core retail on Tuesday. Monday, nothing much. Yeah, Monday, nothing much. And then we have CPI on for CAD. We don't trade CAD. AUD, we don't trade AUD. USD, yeah, this might, yeah, unemployment claims, right? So this might cause some movement. CAD once again. So once again, very chilled out movement. So let's come back to this, right? Let's come back to this gold thing. So I want to properly analyze this. 1873. We took sales at 1873 on a bank holiday, right? 1873 on a bank holiday, and then what happened? We sold. So this was on the 5 minute. Yeah. So let's check. Let's go back to gold. We leave no stone unturned. Okay, so let's see. 1873. This was on. When was this? This was on the 11th. Okay, let's go to the 11th, right? Let's go to the 11th. Let's go to the 11th all the way here, right? 11th. Let's go to the 30-minute and all the way to the 11th. Okay, right? So it was here. Let's enlarge this, right? Let's enlarge this, and let's look at 11th of November. This was the 11th. Okay. Let's remove this. This was taken right over here, right? So 11th of November. Okay, so that was okay. All right. Okay, so this is taken right over here. Yeah, perfect. Right over here. So why did I take this trade here? Looking left, right? This was the. So this is why, you know, whatever trade you take, you need to journal it down. So right now, I wasn't aware of where I took it. Like, it missed my mind. So what did I do? I went back to my archives. I checked where I took this trade and the reason I took this trade. So now what it says is, like, we took, like, this was a support ranging through Asian on the 10th, right? The 5-minute, very strong support. Let's go to the 30 minute, right? Very strong support, very strong support was ranging. So orders were getting collected here. As this came down, this was a fake out. So we needed to fill this area to the left. This was clean candle to the left, right? Clean, beautiful candle to the left. So what happened? This candle came down, went all the way down. We didn't take a trade. Now this candle, this looked like it was going to go up, right? This looked like this high was made. This looked like it was going to go up, but we wanted to wait. And what happened? This candle came all the way down. It's coming down. So now we were targeting for this area, because clean candle to the left, clean wick to the left also. Perfect. Clean wick to the left. So what did we do, right? We took sales as soon as this candle broke, right? Sales were taken. Let's go to sales. Let's go to this. This was taken at 18, where is that? This was taken at 1873.12. Yeah, perfect. So 1873.12 was right over here. Yeah, this was the trade. 1873.12. Once this broke the low, right over here, I entered right over here. Yeah, right over here. My stops were just above just above this candle, right? So my stops are just above that candle. So, but I went to the 5 minute, we go to the 5 minute and we see where we could have managed this trade, right? Where could we have managed this trade? So we extend all the way to the left, okay? And we see where we could have managed this trade. So let's go here. Yeah, today is a pretty long session. Today is a pretty long session because we took lots of trades for the week. Lots of trades for the week, which Monday took a lot of time. So yeah, so now we see where could I have placed my stop, right? So my stops, to be honest, was a mental stop. Like I don't need to lie to you guys. It was a mental stop. So my stops were placed somewhere on the 30-minute, right over here. Yeah, right over here. Let me tell you, you need to have a risk. So last it was I made some good profits for this day, right? So this trade was taken, yeah, so this day was around $87. So wasn't willing to risk anything much. So look at my lot size, 0.25 overall, so 1873.12. Took it right over here. Once it broke, this candle fell down to 1871. Where did I take profits? I took profits at 1871.74. As this candle came down, I took profits right over here. See, broke the low, got this, and these candles came back into drawdown. So where would I have placed my stops? I would say I was risking around $40 to $30 right over here. Yeah, I wouldn't want this. Consider these are trades which I see, which I look for. Made a small bullish candle, broke the low. This was a healthy bullish candle, but we see the momentum was down. Broke the low and just flew down. Look at that, flew down. This move was around 140 pips. So yeah, so that was for gold. And what I want to tell you is, see, from Monday, this was my Monday, starting Monday, 183. So what did I do? I used that $183 to leverage to make more money. So as I kept on making more money, as I kept on getting higher gains, and then, came right here, and then look at the size. This is during US bank holiday. US bank holiday, look at the lot size, right? Compared to the other trading days, reduced. This was around 0.50 and this is around 0.25. Reduced, entirely reduced. No trading. Like, I normally don't trade bank holidays, but opportunity presents, I wanted to try it out. Took buys and worked out, and then this was a killer sell. So from next week onwards, I think I will be upping my lot size a little bit more. Let's say, let's get rid of this 0.50, 0.75, and probably 1.5 or 2. Yeah, that would make sense, because now we see that, you have to become the master in risk management. You can't hesitate to not close a trade. You can't hesitate to close a trade, and you can't just be like, oh, you know what? So look at this. This was like nightmare, right? This is $260 in a loss. So what did I do? I closed it. I still closed it. I could have held on to it. I could have not shown you my profit and loss, but I closed it. I closed it because you have to be transparent. You have to be transparent, because this transparency will take you an extra mile. So if I was holding these, right? If I was holding this, look where price went from 138,998 to 138,498. So on a 0.25 lot, I would be going $1,000 loss. So this entire trade would have eaten my profits I made on a Monday, Tuesday, Wednesday, right? So you have to make sure, end of the day, you have to make sure, once you make a profit for the week, right? So this was the profit for the week. You have to conserve it. What do I mean by conserving it? You can use the same lot size, or you can reduce that lot size to decrease mental pressure. So right over here, 183 I used, and then as it went down, I reduced my lot size. So for the day, I don't have any mental stress. I don't have stress to think, you know what, I made $200 today, but I lost it. End of the day, I took a second trade, I lost it. Now I'm going to take a different trade. No, see how I wanted to take a trade, but I reduced my lot size. So this was a killer move. This went up around 40 pips and paid me around 119. So I was up for the week. So as the day comes to an end, the next day is an entirely different day. The next day is an entirely different day. The next day you have to have a risk exposure. And so what do you do from Monday? So let's say Monday I made $1,400. So from Monday I took $400 into my risk exposure. I was saving that 1,000. Why? If things go bad, if things go south, I still know for the day I'm negative, but for the week I'm positive, you know? So I took that $400 and I put it into the next day. And that next day paid me good. So I took on Wednesday, I took that money and I put it on Wednesday. But Wednesday was a US bank holiday. So the odds are against you. The odds are not in your favor. So when the odds are against you, why are you forcing a trade? Why are you pushing money into the market? Why are you just handing money back to the market? So at that point, you need to think, you know what, today I'm going to reduce my lot size. Today I'm going to reduce my ideas of looking for a trade. Today I'm going to make sure that I don't lose more than $100. So that day I was telling everybody I wouldn't be I wouldn't be willing to lose even $100 today. Because why? Because it's a bank holiday. If I lost more than $100, I would be ashamed of myself. Like, you know what? It was a bank holiday and I forced a trade. End of the day, I come back and I look and I see, oh no, odds were against me. I just wanted myself to be right. I just wanted my idea to be right. I wanted to force a trade and I didn't take a trade. Like, you know, I took the trade, it is resulted in a loss. So what am I trying to do here? Am I trying to play this game in the short run or am I trying to win this in the long run? So that's what I thought, like, you know, every single time you come to the market, you have a, I say this every single time, if you come to the market, have a risk exposure. Today, I am willing to lose, let's say, if you have a 500 pounds account or $5,000 account, for me, I would say I'm willing to lose $200, $300 a day, $500 a day, fine, no problem. Even if it's a losing day, for the week, I'll be up. For the month, I'll be up. So now I'm up for the month. So even if Monday, let's say I use a $5 and I lose like $200, I'm still up for the month. I'm still up for the month. So just because you lose one trade doesn't mean that your entire day is coming to a negative. Yes, it is coming to a negative, but think of the bigger picture. But your bigger picture only gets spoiled and only gets destroyed if you go to overtrade. If you take a loss and if you think, like I'm gonna take extra trades today. See, all these trades I've taken is somewhere around 7:30, 7:30, 4 o'clock to 7:30. That's it. No trades after 9 o'clock, no trades after 10 o'clock, nothing. No swing trades taken, no trades, nothing. Even if I'm taking a swing trade, the only swing trade I took was, let me go back to that, right? It was on a 0.02 lot on GJ, guys, 0.02. That was that. It got stopped out. 0.02. Was it here? Was it here? Let me look at that. Yeah, right over here. This was the only trade I took. And that also, I took it on a 0.02. It shouldn't, the lots, okay, when you take a position, if you're constantly looking at your phone, looking at every pip move, every $1 moving, every $2 moving, $3 moving, that means you are not in a comfortable position to trade. You have either over risked or you don't have enough capital for your position to hold. Position cannot be supported with the capital you have. So either you have to reduce your risk. Like, let's say you on a $100,000 account, if you open a point 0.01, right, 0.01, would that phase you? Even if price moves $50, 50 pips to the downside, and you have a buy, it wouldn't phase you. Why? Because you have $100,000 account, $100,000 account, and you are losing only what, $5? Will that phase you? No, $5 is nothing in risk in percentage terms. $5 is nothing. So you need to make sure that whenever you're taking a trade, you have to be in the most comfortable position. You have to make sure that, you know what, today is a new day. Let's say $100 is my risk. So let me see if I can halve that risk and make some money, So let's say you made, in that $100 risk, you made around $75 from your trade, right? So now on your next trade, are you willing to risk that 75, or are you willing to risk 50% of that 75? You get what I mean? So you have to decide, like, this is like a driving test. You're driving in the highway, you're seeing other cars going at 100 kilometers per hour. Now you're thinking, now your capacity, let's say a Ferrari is going at $100 per hour, right? Now you have an old car that heats up, the engine heats up, and if you go above 40, it's going to break down. So now you think, just because others are going at 100, can I go at 100? You think to yourself, So let's say, okay, two scenarios. Ferrari is going at 150, right? So now you want to catch up with the Ferrari you're looking. So these are like, this is like an example for people, right? So now you see other people making like, okay, this guy made $30,000 for a week. This guy, I'm making $2,000 for a week. Some guy is making $3,000 for a week. Some guy is making $100,000 for a week. I know people who make $100,000 for a week. Some guy. So let's say I look at that guy's Ferrari. So he's making 100,000. So I think, you know what? I'm gonna catch up to this guy. I am gonna catch up to this guy, and I'm gonna do it. So that thought, that thought is like you are not content with yourself. You are not happy with your position. You are not happy with what the market is giving you. So at that point, let's say you're racing now. You're trying to tailgate that Ferrari. You're in your old let me give one a good example of an old car. I don't know. So let's say you're in an old Toyota or something like that, like a very old Toyota, not a new one, like a 1990 model, maybe probably 80s model, and you're shifting gears and you're trying to catch up, and then you are catching up. Let's say you're catching up, like you are tailgating, but as you tailgate, you smell smoke inside the car. You smell smoke, and you see your fuel, the fuel gauge is broken. It's broken, and you see your steering wheel is getting loose. You see your brakes are not working. Your brakes are heated up. So now you see, oh no, what am I doing? My risk management. I am using a 5 lot on a $500 account. A 5 lot that's equal to you using a 5 lot on a $500 account. So when you use the 500, you might catch up. One trade, $500. Wow, perfect. The next trade you use a 5 lot, then you don't manage risk. So now you're going super fast, and like now you get brake smell, now you get the oil indicator, now you get the engine checking indicator on you. Ferrari is just cruising. That's not even the Ferrari's top speed. He's just cruising. You're trying to catch up. You're trying to tell him, you know what? I also can catch up to you. You know what? I can do better than you. I can beat you. Ferrari just looks at you and he's like, okay, you do what you're doing. I'm doing what I'm doing. And and then what happens? You break down in the middle of the highway. You break down, and you still got 30 kilometers to go to your destination, but you break down. So what do I mean by you breaking down? You have blown your account. You have either lost 80% of your capital, or you have blown your account. It's gonna take the service guys to come and fix your car, fix everything, more money. You're gonna spend more money on that car, and that's the same thing. You're gonna spend more money on this account. You're gonna pump more money into it. And Ferrari has already reached. He was cruising at his own pace. You were trying to catch up, and you wanted to you wanted to be the hero here, and you wanted to show people. You wanted to validate yourself. If you try to validate yourself to others, then I would say that will be a recipe for disaster. That would be a great recipe for disaster. So first thing first, if what I'm saying is, let's say if Instagram is influencing you, if people are saying, you know what, I make $5,000 a day, I make $50,000 a week, and $100,000 a month, you need to like unfollow those people. You need to unfollow those people. You need to reassess your following. You need to make sure nobody interferes with your pace. You are running your own race. Nobody's going to come and give you water. Nobody's going to come and give you energy drink and say, you know what, go run. You are running your own pace. You know your body type. You know your stamina. So you are running your own pace. Nobody's going to come and tell you, come on, you can do it. Obviously there'll be support, but nobody's going to run that race for you. You are the only person running that race. Same thing. Nobody's going to trade for you. Nobody's going to trade for you. You're trading. I'm supporting you. Yes, I'm the supporter. I'm supporting you, but I am not trading for you. I am not trading for you. I'm not in your terminal. I'm not trading your money. So it is, end of the day, it is all up to you to manage that risk and to take proper trades, high probability trades. Just because you don't trade one day doesn't mean like you're gonna be left behind. You don't trade one day, that's okay, no stress. You don't have any stress, you don't have any worries about trade management. Just take the day off. If you take a loss, that you can't handle, take the day off. So you mentally prepare yourself for the future. So that's my take on trade management, like today. So trade management today. So I have something else as well. Let me show you that as well. Let me go to that. And So today, let's go through a few. Now it's 5:59. Let's go through this 10 minutes, right? So this book is called The 10 Essentials of Forex Trading. I don't know if you have read this book, but last week we discussed about naked Forex. So this week about 10 Essentials of Forex Trading. So let's go through this first, right? So some people say, you know what? See, why don't I have a percentage value to lose, right? Percentage value. I only have a fixed dollar value. So over here it says great traders are only right 50 to 60% of the time. Exactly. They make lots of money because they keep their losses small. See this? Losses small and gains big. So if you look at my profit and loss statements, you see that losses are kept small. Losses are kept small, gains are big. If I said I was a good trader, but I lost 70% of the time, would you give me your money to trade? Percentages mean nothing in trading. So this was an example. For example, you can be wrong 70% of the time and still make lots of money. 7 losses out of 10 at 400 a piece is $2,800. 3 gains at $1,500 a piece equals to 4,500 in profit. Subtract the losses from the gains and you have a net gain of 1,700, being 70% wrong of the time. So what do I gain by this? What do I mean by this? What I mean is you keep your losses very small, cut your losses and leave your runners. And look what happens if if you're able to trade smaller losses and larger profits. When greed exceeds your need, it will usually take you down a path of self-destruction. So this is very important. This is what I was saying. You don't have to follow up with anybody else. You don't have to catch up to anyone. You don't have to validate yourself. You don't have to tell your friend, you know what, I'm rich, I'm making thousands. Just be very calm, very humble. Spend when you have to spend. Save that. Put that in some investment or even in your bank, and grow that. So you know what has always been amazing? Average couples, if it breaks, the first thing is, oh yes, they will go out and buy one. Then they will take the left ornament and in the cooler, if they go buy. They will come down to the vehicles and they will they're going to work and okay, but also so these are just examples of real life scenarios, but I gave you simpler ones. But I wanted to show you this. This was I'll be sharing this book on Slack. So have a read. So like I said, I just read what I like to read. And the litmus test, where is that? Where was that litmus test? The litmus test. Yeah, your personal litmus test. All right, so before you start anything, before you do anything, there are rules to everything. You can't just go to the library and shout. You can't just talk loudly. Why? Because there are rules. You follow those rules and you will be allowed to stay in that library for a long time. Let's say you go into the library and you shout and you play some music, you'll be kicked out. Same thing with trading. You have to always follow rules. Always follow rules and do not break your trading plan. That's what I say. Do not break your trading plan. So let's say this entire thing, right? This entire chapter will give you a guide and like a path into a trading career, right? So yeah. So first, before you trade, before you let's say your dad, your parents are willing to pump around $10,000 into your account. So at first you'll be thinking, oh wow, $10,000, that's a lot of money. But then, okay, let's make it interesting. Let's say one of your old bosses, right? Now he sees you trading. Okay, you know what? I'm going to give you person X, right? I'm going to give you $10,000, $10,000, and you can only give me 2% a month. 2% a month is fine. 20% a month or 2% a month. It's okay. I'm just giving you this because I want you to excel in trading. So in the beginning, it will be very exciting. Oh, $10,000. All what you will think is like, oh, I can make more money. I'm gonna be rich. 2% is nothing. I can pay him 2% off, and like I'm gonna make some good money and all that stuff. Okay, it's okay to think like that, but you should think who you are. First thing, how your habits will change you, how your real life habits are, can you put determination and motivation to make this happen? Is it worth taking the 10,000? It's all excitement. It's all like, you know, all these butterflies in your stomach and like, oh wow, $10,000 I'm gonna get. But can you continue to be consistently constant profitable? Obviously there'll be some lows and some highs, but you know, can you manage those lows in your life? So that's what this tells you, you know. So some traders, let's say, they have to like, okay, let's say in Australia, trading New York is at 11:30 p.m. in the night. So 11:30 p.m. So I have some people who are willing to join these live stream sessions, but they tell me, bro, you know what? Can you host me an Asian session? I was like, no, bro, you can't host the Asian session. Like I can't, because I'm not good at Asian. I don't do Asian, and Asian is pretty slow. So then these people like this pure example. Okay, so 11:30 p.m. in Australia, and so what they say is, bro, I can't trade at 11:30. So I'm like, you know what? So why are you looking to trade if you can't trade at 11:30 p.m.? I understand you're going to sleep at 11:30 or like 9 o'clock, but if you're looking for trades, so okay, fine. 11:30 p.m. is you can't trade at if you can't trade at 11:30 p.m. So what's the next option? London. So then that guy goes, you know what? I can't trade on London as well. I can't trade London as well. So what do I do? So I was like, bro, then trading is not for you. Trading is not for you. If you can't trade London, so what are you going to trade? Asian? Asian is like so slow. Asian is pretty slow. So what you can do is you can allocate your time. Set those times properly. You know, if you're going to sleep at 11:30, why don't you take a nap at 7 p.m., wake up at 9 p.m., trade for 11:30 to 1:30, because he is not staying in London, right? He's not staying in Australia to trade London. He'll be back in Colombo. So I said, you know, you can have a nap and trade. And that guy was willing to do it. He wasn't willing to do it. He was like, bro, I want you to trade Asian. I was like, bro, you can't tell me what I have to do. I am running this during New York. New York, I'm profitable more in New York. So fine, to New York. So that's what I said. This is following the rules. Like no matter what, you have to follow rules in life. You have to follow rules in life. So let's go through this, right? So this was very, very important, right? So are you more honest than dishonest? Do you always tell the truth? So all this, I know it might sound very weird, but all this will push your mental stability. As a trader, it will push your mental stability. So are you more honest than dishonest? So you have to go through that. And then, you know, are you a promise keeper or a promise breaker? So how is this related to trading, you might ask? So you promise yourself, you know what, with that $10,000, I'm going to use the risk of like $200 a day. But once you come to that risk exposure, you think to yourself, you know what, I'm going to use $400 a day. So are you keeping that promise or are you breaking that promise? You know, so same here, it says, if you're not a promise keeper, you will bring this bad habit to trading table. Simple as that. And then, are you a rule maker or a rule breaker? So the rule I have is I only trade maybe London, small session of London or New York, especially New York. Asian, out of 10 trading days, maybe one will go for Asian, but London and New York, yes. So I'm a rule maker, not a rule breaker. Simple as that, right? Filled with rules. So are you, let's say you're driving in the highway and you see the signboard 100 kilometers per hour. But that was the rule maker. So are you following that rule or are you a rule breaker? So if you're a rule breaker, trading will be a disaster for you. Okay. So are you a good listener or a bad listener? Okay. So if you're a good listener, so right now I'm talking. So if you're listening to me and if you're taking these points which I'm saying or noting this down, then that's fine, no problem. But if you're a bad listener, so let's say while I'm talking, while somebody's talking, like while somebody's giving you good advice, you try to put your own views out there. You interrupt that person. You try, bro, no, stop, bro, no. I want to tell you this. So you're interrupting somebody else's conversation. So in life, you need to listen first. You need to listen and then you need to tell you. You need to give give them space to explain in anything, even in an argument, right? You have to let them talk. You say, okay, I'll let you talk, and after I let you talk, I will talk to you. Simple as that. So give respect to take respect. Simple as that. Okay, and then uh, do you think before you speak? Do you think before you speak, or speak before you think? So this is very, very important. So when you're trading, you're seeing candles are going like wild and it's going down. And are you going to initiate sales and then think about it? Oh no, where am I going to keep my stop loss? Where am I going to keep my stop loss? Where's my take profit? Oh shit, I have used an extra lot, a 2 lot, 3 lot. What am I going to do? So if that's happening, then once again, recipe for disaster. So always think before you speak. So basically what I'm saying is, think before you position yourself. Think before you, I always do this, like when price is coming down, I always think, where am I going to keep my stop loss? Is it matching with my risk exposure? One thing that's very important. Same thing here. Do you think before you act, or act before you think? And then we come down to we come down to one last thing. There's one last thing. This is very important. Are you more positive about life or more negative about life? Okay, so this is very important. Why? Because when you are positive about life, so some people always talk negative, like, oh, this didn't come right, oh, my life is going downhill, like, I can't do anything about it, think think positive. Think in abundance. Attract abundance. In YouTube, type abundance affirmations. When you type abundance affirmations, there will always be, like, in your mind should be trained to always think, what, I'm attracting abundance. Today, what I'm going to do will attract abundance. What am I trying to get? Like, am I trying to make more money? Like, the more you think, as soon as you get in trade, you think, oh shit, it's gonna go down, it's gonna go down. So you're attracting that negative energy. As soon as you think that, it's going to go down, I'm scared, I don't know what to do, and then price is going to be like, oh, you're scared, okay, haha, going to come down, dip you out, and then you hit your stops and go up again. Same thing, whenever I come to the live streams, I say, let's have a good trading session. Let's have a good, why? Affirmation. You put that energy out into the universe. Affirmation. So be more positive. Like, even with trading, if you take a loss, be more positive about it. Like, oh, let me learn. How can I make this positive? I'm going to learn something about it. What can I learn from this loss? What can I learn from it? Take a journal, write it down. Write it down. Don't type it, write it down. That's what I always do. I write it down so it sticks more to your head. When you write something down with a pen or pencil, it sticks more to your head. So law of attraction. Exactly. This is very important. For example, if you're going on the road and you play this yellow car game, and you look at yellow cars, you only look and hope for yellow cars to hit your partner or slap your partner, whatever, and you spot yellow cars. Simple as that. You look for opportunities, you keep on hunting for opportunities, and you will spot those opportunities. When we think about negative thoughts, that negative minds will create negative circumstances and negative events in our lives, attract negative people into our lives. The power of this law is incredible. Exactly. This is very important. This is the one I was wanting to talk about. This is very important. Negative people. See, same thing. So do you fear mistakes or do you embrace them? Simple as that. People make mistakes. People make big mistakes in life, but come out clean in the end. And yes, this is very important. Do you focus on what you have or what you have lost? So if this applies to me, if I was thinking about, remember I was talking about the 3,000 euro pound $3,000 loss I had on euro USD. If I was thinking about that, and if I was like, had those negative thoughts and negative pressure, negative sentiment, I would not be here today. I would be not. See, this week I made $2,000. I recovered that loss. I would say I recovered that loss. I would have recovered that loss long time ago. But if I were to compare this week and that 2-3 years ago trading, yes, look at the point I am in my life. I am in my life. Like, I take trades from a certain time, trades with control risk. So I haven't focused on what you lost. I have learned from what I've lost. I've learned from what I've lost. Let it be money, close relationship, personal property, whatever it is. You come out strong from that. That is very important. You come out pretty strong from that. You think people who don't like, let's say, in my opinion, I always note down things that happen during a negative aspect of my life. I write it down and I think, what did I do? And I write down what I do during a positive aspect. So if things are going negative, I look back into the positive page in my journal and I see, what did I do for this positive position, positive life? What did I do? So this behavior of me writing positive and negatives of daily life, was encouraged by Matthew, right? Matthew McCartney. So he says at one point he was making, his life was pretty bad. It. Yeah, I shared this on my Instagram story, right? So he had a podcast with Joe, and what happened? He told that at one point his life is really good. He was making money. He was getting roles. He was getting proper attention from people, making good money. And see, he wrote all of that down. Today I did this. Today I spoke to this guy. I made that. I made this much. And then he hit rock bottom. When he hit rock bottom, he went back to that journal. He went back to the journal. He started reading it like a storybook. And then he figured, what did I do wrong? What did I do right? And that, he said, will put you in the correct path. So that, are you a goal setter or a goal quitter? So some people say, okay, you know what, I'm going to take trading seriously. I'm going to do it this week. I'm going to do it this month. So people who said, I'm going to trade on January, haven't still become traders. They are still finding an excuse to not trade. They're still finding, excuse. They still say, I don't have capital, I don't have this. Okay, understandable. But you have to set your goal and smash those goals. So these are very important. Like this book, the 10 Essentials of Forex Trading, was a very, very, very insightful book. Your purpose, life's purpose, all this just gives you the mental aspect, all of that. Like I'll be sharing this book on Slack. So once you have some time, go through it. So like, it just tells you introduction to Forex. So I didn't read that. And this is all about the basics of Forex. And obviously you guys are here and you know the basics, and like, these are the softwares. These are like the technical parts. These are how to read Japanese candlesticks, that. And these are indicators. So I don't use indicators, so that's fine. And these are types of candles forming: dojis and spinning tops and harami, and so those are candles forming. And finally, my other thing was this last one was so yeah, so the final analysis. So we just read through this. This was also a pretty good. Was it worth it? Was it this thing? And yeah, so it is what it is. Like, you need to align yourself. If you really want trading to be your career, or trading to be your side hustle, at this point in your life, you need to think, there's lockdowns. Even pilots have been laid off. Can you imagine that? I have a friend, he has been laid off. He was working in the Emirates for 10 years. He has been laid off, immediate effect laid off. So what is he doing now? He's just at home. So this is a skill. Maybe you are in the corporate sector, or maybe you want to work in a different field, or like like a marine biologist or whatever. This field, like, this is skill, because this market is going nowhere. Maybe obviously to adapt, but this skill is a high income skill. So this skill, if you learn it properly, if you manage yourself, if you manage risk, this skill will control all other aspects of your life as well. You focus on managing risk. So when you focus on managing risk, you focus on managing risk throughout your life. If I do this, what? If I do go there, what? If I give this person money, what? Managing risk is number one. In any situation, you need to protect yourself. If you're walking in the night alone, you see these gangsters and they're trying to mug you. How can you protect yourself? How can you manage risk? And then let's say you're walking into the headmaster's office, and you've done something, but you don't know whether that headmaster knows that you've done this, but the headmaster is trying to get it out of you. He's trying to fish for it. So how can you protect yourself in every situation? How are you going to protect yourself? So you have to think about the worst case. As I always say, You have to think about the worst case scenario, and that will eventually control your life. That will give you avenues into you directing your life into a positive aspect. So go for that, and try to read this book. So today, yeah, so this week I made 2050 bucks, so that's fine. And that's my thing, right? So the only reason I am even showing you my profits is because I like to be transparent, and I want to tell you guys, I want to instill that thought into your head, that even opening small lots can make you profits. Managing risk, having small positions or having small losses can get you out into the blue end of the week. You are in the blue end of the week. What I mean by in the blue is you're in profits. So just make sure to manage your risk. And yeah, so that's about it. So that's about it for today's session. So I hope you took some points of what I said, and I will be sharing this book later into Slack. And yeah, so always manage yourself, always protect yourself. Just take this into your head. Always protect yourself at any cost. You don't owe anybody anything, and nobody owes you anything. You know, always protect yourself, and look after yourself, and make sure you are on the path to where you want to be every single day. Make sure you every single day make sure you're working towards one of your goals. There's no point. Some people wait, like, okay, last point, right? Some people wait for Fridays. Why are you waiting for Fridays? Oh no, bro, I want to escape from my work life. I want to, chill. I want to chill at home, you know. So those kind of mentalities, and, like, those things won't get you anywhere. Why do you want to escape something? Why can't you face it? Why can't you face it? And why can't you get a positive outcome? If you don't like your work life, fine, but why can't you work on something else on the weekend? Simple as that. You might be born less well off. I won't say poor. You are born less well off, but it is your job. By the end of the time you get your deathbed or anything, you have to look back and you have to have enjoyed your life. What I mean by enjoying life is, obviously, there are other aspects of enjoying life, but you have to have found your purpose. You know, instilling that financial stability for the generation to come. You know, your grandchildren, they look at you and say, oh, you know what, my granddad was a forex trader, and he did this. He came from a less well-off family, and but he made sure that, his family is doing good, and he made sure that we are doing good. We are trust fund babies now, this and that. So just make sure, think about the future, not so into the future because you don't know what's going to happen, but think about the whole picture, where you want to be, because that where you want to be will lead you right today, starting now. If you keep a goal, and if you work towards that goal every day, some days you'll be like, I don't want to do this, this is so hectic, I don't want to do. So on those days, if you wake up, if you wake your ass up, and if you go, and if you say, you know what, I made a promise, I'm not a goal quitter, I'm not a rule breaker, I'm going to do this. So once you do that, at the end of the day, I will tell you this, I will promise you this. End of that day, when you're going to bed, you look back and you think, you know what, today turned out to be a very good day. I wasn't lazy. I did something. So self-accomplishment. So make sure in anything in life, just make sure that you are on your path to where you want to be and have positive thoughts. And that's it for today. I'm sorry for taking extra 30 minutes to explain this. The stream was supposed to be till like 6. 6, and it took more than that. But yes, so thank you for staying online, and thank you for listening. And I will see you guys on Monday, and on Sunday night I will send you Asian analysis. And hope you guys have a good weekend. Work on something you like, and work on some projects or anything like that. Don't waste your weekend away, and enjoy your weekend, and spend time with some family, and most importantly, stay safe and stay healthy. All right, guys, so this will be recorded, and if you want the recording, it will be uploaded. And stay safe and take good care of yourself, and have a good weekend. Take care.